With us this morning, Jefferies analyst Brent Thill just raised his target on Alphabet to 200. He was at 180, has a buy rating on the stock and a buy on Microsoft. Happy Friday, Brent.
Happy Friday.
Are we done worrying about existential threats to search on the Alphabet side?
I think in the short term, Google put up great numbers across YouTube, cloud, search, and clearly the sentiment was the worst of any tech names that we cover here, and everyone continued to believe that AI wasn't even part of the story. And I think what they're proving is AI is going to matter, but it's going to matter down the road. Today, we're still super early in this journey, both for Microsoft and Google. It's really starting to only build, and that's going to be the next 10-year wave. So we're at the beginning. We think that Google's making the right moves. They could be quicker, they could be faster to make those moves and get them addressed. But we think, again, based on what we're seeing so far, there's no erosion of search share, and advertisers continue to flock to the platform because the users are still there.
We've been talking all morning about the CapEx arms race, and it was a healthy beat on that front at Alphabet last night. Is the guidance on CapEx still within the realm of the reasonable?
Every quarter we bring CapEx up. For Microsoft, we brought it up, over $10 billion initially at the beginning of the year, and we're continuing to be too low on CapEx. And I think what we're finding with the AI war, right, there's effectively only a handful of companies that can compete in a major way, and it's a CapEx war. Every single vendor from Meta, Microsoft, Google, all of our CapEx numbers are going way higher. Even for Microsoft, again, clearing over $50 billion of CapEx this year. That number, could be 65 to 70 billion plus next year. So you're just looking at a situation where everyone is still building this AI infrastructure. And this is why, semis and hardware continue to outperform both internet and software because of the investments that all these vendors are making. When Zuckerberg, posted the picture of him and Jensen and his Instagram, everyone knew where the money's going, right? And that's effectively where everything is going right now. It's not going anywhere else other than NVIDIA and the basically enabling infrastructure, these data centers. We ran into one individual this week that said we're now worrying about power and the transmission lines to transmit all this AI excitement to the end user. So we've got bigger problems right now beyond just technology that the tech industry has to solve. And it's pretty eye-opening, some of the stories that we're hearing.
Yeah, I mean, the power issue is a real one, and the billions that are going to have to go into that side of things just to be able to actually make good on all the billions going into data centers is important. Brent, the numbers themselves are just staggering. You've been covering this industry for a number of years. Just put them in some perspective. I mean, I think you just said Microsoft could spend $70 billion next year on CapEx. It's almost hard to conceive of numbers that large.
It really is, and I think you go back to, this is, again, really, really early, and I think they have to build ahead of the demand. They've said this today. They're sold out. They can't meet the demand, the capacity. They're overwhelmed, and this is the same situation when you talk to Oracle, when you talk to everyone in the industry. They're at this point that demand is exceeding the supply, and so they're having to make a guess of what is the right demand level that they're going to see, and they're all building ahead of what's happening. Now, we could run into a situation where they may overbuild. Now, the good news for Microsoft is they've said is they could overbuild for Azure, but maybe their security business sees an influx of demand, maybe their gaming business, and they can shift demand around to their different divisions. So Microsoft's in a unique situation because they can go up and down the stack from applications to security to gaming to infrastructure. Other companies that we cover can't really flex that way. So yeah, it's going to be, the numbers are really hard to believe. Every time we look at it, we're like, there's no way they can spend more, and they keep spending more, and we keep raising our numbers. But they're doing it profitably, which is amazing, right? This year, margins up 200 basis points.